Oh boy, welcome to the Best of US Investors, two regular guys show. I am Trent, and this genius is Mark, who
Well, I don't know about
sits next to
genius.
me. Oh yeah, you are, dude.
Yeah.
Today we are going to hit upon what's happening this week, and that this week could be the pivot week for markets. We're going to look at government reports and why they're wrong, along with charts and a plan of attack on how to go about building a process. So let's get going.
All right.
All
So
right.
today, so I was gone on vacation last week. So, I was down in Florida in your world, and it's a nice world down there.
Yeah.
And it was a good week to be gone because the markets, we had Tesla and we had Google, and with their reports, we saw, the markets drop until Friday, and then we had some inflation data come out that, oh, maybe the Fed will lower rates, and so here we are again this week. What are we looking at? We're looking at earnings again from four mega tech caps. We
Yeah.
got Microsoft today, as of this recording. Okay. Tomorrow we've got, I think, Apple and Meta, and then we have Amazon on Wednesday, Thursday.
Thursday.
And in the middle of that is the FOMC meeting, which is the Federal Open Markets Committee meeting, where they decide interest rate policy. Okay. And everyone's very excited and happy that interest rate policy may be cutting rates. And some people even think in July we'll be cutting rates. I don't personally think so. But if you look at where the money flowed this week, went into interest rate sensitive kind of areas like real estate, utilities, things like that.
Yep.
But again, so we have that, and that will come out tomorrow, which will be the day this video comes out. So we have a lot. We have a lot going, and again, it's back to interest rates and it's back to earnings. We saw a little bit of chink in the armor in Tesla and Google last week, and today is Microsoft. And for the last 2 days, our charts have really been sideways to down as people are kind of digesting. Swing trade wise, we have some swing trades out there that are doing pretty well, but we know what's coming. It's like um, something's happening out in the ocean, and do I take my sailboat out when I don't know what's happening? Is it a storm? I don't know, or do I just sit in port right now? And for me, I'm sitting in the port waiting for the storm to go by, and it could be good, could be bad. But I tell you that if any or all or some of these mega caps do not hit it out of the ballpark and give us some nice forward guidance out of the ballpark, I fear that we could be right back where we were last week after Tesla and Google. What do you think?
Absolutely. I think we have, you and I were talking off camera here a little bit ago. If you go back and look at weekly charts, you see where the pivot started. And that was right around, I would say, between the 1st of July and the 17th or so of July in some of these
Somewhere there.
companies.
Yep.
And you see the charts. They cross, they close below the 9-day simple moving average. That shows and tells me on a weekly standpoint, momentum and money distribution is moving out of these high beta, high tech stocks, and it's going somewhere else. Like you said, it's going towards where a lowering of interest rates could be really beneficial, like real estate or utilities, consumer staples, those kind of things. But it's not going into technology. And in looking at the charts today, before I got on the call with you, I was just like so wound up, like, oh Jesus, I've been through this over the last 25, 26 years. You've been through this longer. This is really not a great movie. I don't like horror movies. So I'm really just, yeah, this is concerning, majorly
It,
concerning.
and it's the markets, and markets are not the economy. Okay. We've been learning that, but it appears that the markets and the economy may be finally converging a little bit
Yep.
as we look at, I look at manufacturing a lot. We have some people in the channel on our platinum Zoom call on Fridays in manufacturing, and they would agree that manufacturing is not doing that well, no matter what the reports are. And we see, you know, CNBC and Steve Leisman and the financial channels and government reports come out, and it's very rosy. This is look, inflation's coming down. Well, inflation is not coming down. The rate of inflation is coming down. We're still way over. When we went through this a couple of weeks ago on individual things like diapers and food and things that we need, it's up since 2020 35% on these individuals. So no, inflation is not coming down, and people are feeling that pinch. Just yesterday, I got my insurance for my house renewal yearly doubled. Okay, that's not in the PCE or any of these reports. Okay, that's inflation. Okay, car insurance, I got it on the same day. Car insurance up. Okay, that's not really reflected in all these reports because they take that stuff out. Okay, then there's the core report and this. And so I'm not seeing inflation, at 2.3%. I'm seeing it double on my house insurance, and you have to pay that. Okay, you cannot
Yeah.
not pay that. So this is something that not only I'm seeing, I'm sure you're seeing it down in Florida. I'm sure people are seeing it in Wisconsin and California and New York and everywhere.
Yeah.
So again, when I look at manufacturing, we have higher interest rates. Okay, and this may be the final breaking point that they have to bring them down, because once they start lowering interest rates, you're going to see them lower and lower and lower based on the history, and that'll put us right into recession. So higher interest rates, rising operating costs, strengthening US dollar, and lower selling prices for commodities are dampening activities at factories across the country. Executives for the makers of long-lasting items such as cars, these are called durable goods, crop harvesting combines, and today I have a couple tractors out here harvesting my hay, and the boys from Warner Enterprise Custom Farming got me a hat
Right
for a
on.
couple of for two regular guys show as they're out cutting my hay today. So give them a shout out. If anyone wants a shout out, send us some hats and we'll wear them. Anyway, that was just self-serving. Anyway,
It's all right.
washing machines.
I need one. I need one.
Yeah, I wear them all the time. So
Yeah.
anyway, are projecting challenging business conditions for the remaining of the year. So John Deere, and again, last week I was sitting on the beach in St. Pete, Florida, and I sat next to a guy who got laid off. He was a machinist from John Deere. Okay, he says, I'm a machinist. I can go start my own machine company, whatever. He didn't seem too worried at the point, but he told me that his factory is being closed and they're moving it to Mexico. So John Deere, the world's largest manufacturer of farm equipment by sales, has shed about 2,100 production workers since November, or 15% of its hourly workforce. AGCO, who's their rival, said in June it would cut 6% of its salary workforce worldwide, or about 800 people by the end of the year. And after years of elevated farm equipment sales, farmers' buying power this year is being diminished by lower prices for corn, soybeans, and other commodities that Agriculture Department predicts will reduce farm income by 25%. Okay, so it's really weird. I talked to my friends who are farming, and right now, and it is their cost of production has gone up, but the price that they get when they go sell it is low. And then the middlemen get in there and they add on the inflation, the Kellogg's and the Post and whatever uses it's the corn and and they raise it up and you get the inflation, but they're not hitting it. 25%, that's going to hit the farm income right here where I'm at.
Jeez.
When you think about other things that people have, discretionary items that they don't have to have, Polaris, okay, it makes recreation vehicles. I have a Polaris side by side. Okay, everybody out here has one. During the pandemic, they couldn't keep enough of them on the shelves. People were buying them, going out, outside. I said this week it would adjust production to cut back on shipments to dealers. The disclosure came as a report of a 49% drop in quarterly income, 49%, okay?
That's
And
insane.
noted that sales of its motorcycles, boats, and off-road vehicles all dropped as consumers pulled back on discretionary purchases. Whirlpool, okay, said soft housing market is holding down demand for its refrigerators, dishwashers, and other household appliances. MSC Industrial Direct, a distributor of tools and industrial supplies to manufacturers, says average daily sales during its recent completed quarter decreased by 7% compared with a year earlier. So they are a distributor of tools of these companies that make these things down. Winnebago, okay, recreational vehicles. Remember during the pandemic, They were
Couldn't get
selling
one.
left and right.
Yeah.
And they have a thing. Someone has it. It's called the RV index. And when RVs start not selling, that says the economy is going down. Well, Winnebago Industries reported adjusted earnings of $1.13 per share for the third quarter of 2024, missing the consensus estimate of $1.30 and falling 46.9% year over year. The
Wow.
recreational vehicle maker reported revenues of $768 million for the quarter under review, missing the Zacks consensus estimate of $800 million. The top line also fell 13% year over year. Okay, so there's all your discretionary stuff. Those people probably going to get laid off. If you're not making anything, you're going to get
Oh
laid
yeah.
off. You get laid off and you can't find another job, and the JOLTS report's coming out. We'll see how many job openings are open, for skilled machinists and assemblers and things. We'll see. But you get laid off and you can't make your payments. You're not making your car payments. You're not making your boat payments. You're not making your RV payments. You're making your house payments. You're trying to eat.
Yeah.
Okay.
Come
Let's
get the
talk about
RV.
eating. Yeah. How about McDonald's?
Oh,
McDonald's, which we all used to go, you get the burger. McDonald's posted weak sales in the second quarter as increasingly value conscious consumers in the US and China paid fewer visits to restaurants. The company's net income fell 12% to $2 billion or $2.80 per share, excluding one-time items such as restructuring. McDonald's earned $2.97 per share. That was far from the per profit share of 307 that the analyst had forecast. So here again, I don't have much faith in analysts. This shows me why. Okay.
right.
McDonald's warned in April that more of its inflationary worried consumers were seeking better value and affordability. So where do you go if you can't go to McDonald's for value and affordability? They're staying home.
Here's the thing about this, Mark. As much as I hate this, fast food has become the go-to for the low income poverty level, right? At one time, you could take a family of four to McDonald's, young children, let's say, so they don't eat a whole lot. You
Kids
could
meals.
feed kids meals. You could feed a family for less than, depending on where you are in the country. If you're in California, just double than this number, $12. You could feed a family of four. And that's why McDonald's and these fast food places just skyrocketed in popularity, and it increased obesity and blah, blah, blah. But now what McDonald's earnings is showing me, and probably every other fast food company, is saying we've priced ourselves out of our market, out of our TAM, total area market, addressable market. We're pricing ourselves out and we're paying. If that's not the indicator that stuff's hitting the fan, I don't know what is. I don't know.
Oh my gosh, you're turning red. Okay.
I'm just like, because Mark, my fists hurt right here because I'm constantly doing this with you for the last 6 months. You and I are going, look at the economy. Look at what's happening. Look at what poor people are doing. McDonald's to me was like, boom, exclamation point. We're having a problem.
Well, yeah, Houston, we have a problem. And it's hitting everyone.
There's nobody in Houston because they just can't afford them anymore.
Well,
it's not dead just radio.
It's not just the poor people. It's retirees. Okay, because I have a lot of my friends who are retirees and stuff, and they have their fixed income or whatever. They're doing okay. But 1 in 5 retirees are returning to work, based on a recent report from T. Rowe Price. Approximately 20% of retirees are already working either part-time or full-time work, while 7% are actively seeking employment during retirement. With inflation hit a 40-year record high and the volatility in the stock and bond market, retirees are worried about their nest egg funding their lifestyle, no matter what the retirement calculator says. So it's hitting retirees also. Okay.
Yeah.
So when you think about it, there's other studies out there by Talker Research, and this was on behalf of a firm, found that 3 in 5 people believe that the U.S. is currently in a recession, even though we're not officially in one. Okay. And I agree with that. I think we are in pretty much a recession.
Yeah.
And we have been for a while, at least for regular guys like you and I, we're in a recession. Okay.
Absolutely.
And when the third leg of the stool breaks, which is people losing their jobs, the country is going to see recession, in my opinion.
Yeah.
Okay. So again, I just got hit with a doubling of my home insurance, and insurance providing policies to homeowners were hit with a 15.2 billion net underwriting loss last year, according to figures from the rating agency AM Best, saying that that figure was the worst since at least 2000. Okay, so
Wow.
there you go. On and again, when I look at retirees going back to work, you have to. If your property taxes are going up and you have a homeowners insurance, which you have to have, you're going to have to go back to work. Who can take a double hit on something like that? You know,
Yeah.
again. So
Mark,
again, remember, the economy is great. I don't understand why people aren't happy out there. And I hear it all the time. Like they don't live in the world that we live in. How about cars? Anyone have a car out there you're making a payment on? Car repossessions have spiked 50% from 2 years ago, 23% from just last year. The surge in repossessions is a critical indicator the economy is not as healthy as some might believe, with many consumers struggling to keep up with their bills. One of the primary factors contributing to this issue is a significant depreciation of the value of used cars. This sharp decline means that many people who bought cars in the last couple of years, remember when we didn't have any cars, they were paying the big price for them? They're now underwater in their loans, owing more on their vehicles than they're worth.
yeah,
People are just letting them go. Come get it.
they
You
have
know.
to.
Yeah, we
Yeah.
went over last week. The average car payment on a new car was seven something, and I think five something on a used car. Okay, you
It's
give up. You got to eat and you got to live somewhere. You don't need a car. You got Uber.
yeah. Mark,
And how about?
oh,
Go
go
ahead.
ahead. Go
No,
ahead.
no,
No,
go
I'll
ahead. No,
jump.
I want to hear. I want to hear your thought.
Okay. So I'm on TikTok. Chinese are following me. They see everything I do, whatever. Um, Jon Stewart, he did a show on a comedy channel, I think called The Late Show or something like that. He
Yep.
put aside his political views and blah, blah, blah. I saw this TikTok where he mapped out. He said that if you look at the Gen X middle class, they are in major trouble. And he mapped it out. And I thought this was brilliant. And it was, and unfortunately, sadly, brilliant. As a Gen X, that's me, 55, we get to our, say, 45 years old. Our kids are moving out of the house. They go off to college. We're paying for that. One way or another, we're contributing to that. Okay. They get out of college, and then my parents begin to get older and they need help. And they made me need assisted living. And that goes on because of the pharmaceutical industry keeping people alive longer than they probably should stay alive. That continues to drain all the equity that we have saved for my generation, Gen X, which tells me this is the middle class in my age category, is getting decimated. And if this continues, you will see that my generation's middle class dissolve, go away. We'll never retire unless we're just good at, unless we join best of U.S. investors and we're preserving our capital and we're investing correctly, or some way or another you inherit a ton of money, and that ton of money right now that my generation would have inherited is going to the upkeep of my parents, and because of inflation, it's dwindling. So that wealth transfer I've heard about for 20 some odd years is quickly dwindling.
Yeah.
And to
And
me,
go ahead.
and to me, my generation's middle class is going to be work for the rest of your life on average, broke as hell.
Yeah.
It's
Well,
just in this way our economy has
your
been
purchasing
designed.
power is diminishing by 7 to 10% a year. I mean, the
Yeah.
devaluation of the dollar. Okay. On top of inflation, on top of increased taxes, on top of increased, you know, home and car insurance. And it's picking people apart. So do you think you ever own your home? You don't, because as long as you have property taxes and homeowners insurance, you're always going to have a payment. And my
I
property taxes and my home insurance are now they're more than my payment, my principal and interest on my house.
yeah.
Okay. And I have a 3%, you know,
Mortgage.
uh, mortgage.
Yeah.
Okay. But you're never going to get out of it. So why not, why do you own anything and, you own nothing and be happy, I guess is where we're headed,
Yeah.
you
I
know?
I thought Grant Cardone was nuts at one point, but recently I've come to his understanding. You
Yeah.
rent the place you live in, you buy the house or duplex and you rent it and you generate revenue and you generate income. Because I own a home. I mean, I live in a home, I pay a mortgage, upkeep, taxes, insurance. It's ridiculous. It is ridiculous.
Yeah. I
You
can,
know?
I can attest to that.
Yeah.
Well, anyone owns a home can attest to that right now. And
Yeah.
that, I don't care what inflation report comes out, it's not going to reflect
No.
those costs. And it's going to be, oh, look, we almost hit our 2% target. Now we can start lowering rates. And then that's what will kick us into the higher inflation and it'll kick us into recession, which we're already seeing from what we just reported on. And let's
Yeah.
look at houses. So you would think housing would be coming down, but the S&P Case-Shiller 20 home price index came out this week in the US and it increased 6.8% year on year in May of 2024, following an upward revised April of 7.3% and slightly higher than the forecast of 6.7%. Okay, so homes are not coming down for, affordability, you would think. And another interesting thing that I just saw is adjustable rate mortgage. I didn't know people still did this on their homes, but according to this report, thousands of homeowners who took adjustable rate loans, which are called ARMs, 5 years ago are set to see their rates suddenly skyrocket as the initial offer they accepted expires and payments are adjusted based on the current market conditions. An estimated 1.7 million homeowners have bought homes with adjustable rate mortgages since 2019, according to the data from the Intercontinental Exchange. A total of 328,000 of these loans have already reset, which means that the initial offer of fixed rate has expired. Another 102 will reset over the next 12 months, 102,000, according to ICE, which operates global financial exchanges. So not only are we seeing the resetting of financing for commercial real estate, but there are actually people out there that have arms. Same thing. They were probably waiting for the rates to come down. They're still around close to 7% now. If you had an adjustable rate, you just doubled your payment probably.
Mark.
Are you gonna have a stroke right here?
No, 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 no.
Okay, good. I don't want that.
Vice President Kamala Harris. I saw this on CNBC. They had her financial report, I guess, was put out. I guess they have put out every quarter or something. She has a arm. It resets, I believe, in 2027. Our potential president of the free world could be in a shitstorm trying to refinance our home in 2 years if they don't lower rates. And honestly, when it comes to whole lowering rates, we're at the average, right? We're close to it.
Yeah, yeah.
Maybe we should just not lower rates or raise them and just let the system work its way out of this. That means Kamala, I don't know what her net worth or anything is. I doubt she's going to pay her house off. Could be refinancing in 2 years at 7%.
Well, luckily,
And
there's a lot of
I
insider.
suspect Trump has some loans that are revolving and he's dealing with the same crap. But it's everywhere. Just making bad decisions.
Well, I think that's what we're all about. I've been through this before, and I have held during times, and if you're down 50%, it takes you 100% to get back to even. And where I'm at in my life and in my risk factor, I don't want to lose money. So that's why I started watching technical analysis and charts
Yeah.
so that I know even on my long term when to get out, when to stay in. Right now, I can put money and I have money in treasury bills paying 5.3 to 4%. I just had a CD expire 2 weeks ago. It was at 5.5%. Okay. I'm willing to take that because that is risk off for me right now. And I'm looking at what's happening in the markets and not all stocks. I mean, we have a watch list on the Platinum channel and we can look at some stocks today, right live. And I'll
Yep.
show you some of the ones we picked and where they're at. There are stocks that go up and down markets and and you just got to be careful and you got to have a plan, whether you're investing or you're trading. And I have a trading guidelines and they're right there on the Platinum channel. Anyone can go look at them. They're pretty simple.
Yep.
Okay. And then you can go to the watch, you can go to the paper trade portfolio. We only paper trade and see what the results are from the time we put them on that list to the time we decided to get out when it hit a resistance or whatever. And it's a pretty good record so far for being halfway through the year, I would say.
Yeah, it's
Uh,
excellent.
so, and if you have a investment strategy, and I talked to a gentleman yesterday who the markets had dealt him a pretty bad blow and he was down quite a bit the last 2 weeks. And I asked what his plan was, and he didn't have a plan. Okay. And you've got to have at least a risk management plan on the downside so that look, I've been in there and I'm riding these high and it's okay to take that profit and bank it away a little bit. You don't have, I know I'm going to get killed on this because the long-term financial planners are going to say, time in the market is better than timing the market. And I'm not talking about timing the market. I'm talking about using the data of the charts to help you make the more informed decision, giving you a higher probability of success in either your trading or your investments. And that's what we're about on this side of the Platinum channel.
Yeah. I mean, honestly, you're not going to hear Paul Tudor Jones say more time in the market is whatever,
Yeah.
comment,
No,
because he
no, you're not
uses the
going to.
200-day simple moving average as a
Exactly.
determinant of you're in if you're out.
No, you're
That's it.
exactly right.
Yeah. Rich people, and I'm like ultra rich people have been making this exit for almost a year. The leader of
Well,
one of the most popular companies on the planet, NVIDIA, Jensen Hong, apologize if I pronounce your name wrong, has been selling his NVIDIA stock for months.
along with all his executives,
Yeah.
they have not bought any stocks since 2020. I think the executive team, so they are getting out. Elon Musk got out.
Yeah.
Okay, J.P. Morgan, Jamie Dimon got out. Okay, these guys aren't getting out to go buy a swimming pool. They have enough financing and money to buy a swimming
They
pool
got more
or a
swimming
second
pools.
or a second house in Morocco. They
No.
have that money. They're doing it because they see the writing on the wall,
Yeah.
and they keep baiting us. Oh no, you stay in the market. You guys, time in the market will get you back because if you're out the 3 days that it goes up, you're going to miss 2% of whatever. And okay, fine. I mean, and I'm not giving advice here. I'm just saying over my years,
Yeah.
had I gone to a better strategy of learning the charts and understanding when the market's telling you to get out. And I always tell them the platform, and the Platinum channel, I said, let the market come to you. Don't rush it. And you don't have to be in the market every single day. And
Right.
I'm not. And I haven't really traded this week because we have all these earnings and why would I risk my capital, this week, when I know what's ahead and it's all going to be choppy water. So
Yeah.
what? Okay, let's say Microsoft hits it out of the park. Microsoft goes up, the markets go up. Wonderful, because all those that came down are going to be good setups for me. And I'll go in, I'll find those setups, and I'll ride those up.
Right. Right. Think of this. For 30 years, the bond market, let's use say the 10-year treasury, 5-year, 30-year treasury, those yields have fallen for so long. And they got to a point where the yields were so low, it wasn't really worth being in a bond. So you saw a move in institutional investors, particularly pension funds, who have typically a 7% withdrawal rate on an annual basis, having to go out on the risk spectrum to get enough growth in their portfolios to fulfill those withdrawals and stay alive. Now we're in an environment where yields have gone up through the roof. You said something about what a couple month or 5 year U.S. Treasuries. I think the 10 years close to 4.25. When you can buy short-term duration treasuries at 5% or above, and pretty much guaranteed that you're going to get your money back when it matures, this is an environment where that's actually a sound potential distribution from risk on to risk off. That's where you can preserve capital. And you see more and more people they've been so hooked on this upward move, especially those, in their late 50s, 60s, 70s. They've been on this joyride for so long. Now the place to potentially go to preserve, capital is the most risk off asset class, and that's high grade bond market, because you get paid while you wait. And because markets rotate from risk on to risk off, you're going to see more money flow in there. Paul posted something on the Discord about record inflows to bonds in the last couple months. Well, when yields drop, values go up. And I think that's more and more, that is one of those areas we don't talk about bonds all that much on the Two Regular Guys show or in general on Best of US, but that's a category
We
that you can preserve capital and
we do
preserve
actually
wealth.
in the swing trade. We talk about it every week because we put out, today is Treasury Bill Tuesday
Yeah.
and today is Treasury Thursday. So we put the chart out and people can go see what the offering is on, from the Treasury on new issues. So we do that every Tuesday and every Thursday. And we have a lot of our uh, team members who go and they're like, I got this money, I'm going to put it in a 30-day Treasury. And,
Yeah.
and when it comes out at the end, if there's something I want to use it with, I will. Otherwise, I'll roll it over and do it again.
I'm actually very surprised at how many tribe members
In platinum.
are doing that process. It
Well,
blows me
because
away.
it's risk off. So like the last 2 weeks, you're feeling pretty good about yourself, eating popcorn and watching everyone else, no pun intended, pull their hair out.
Yeah. I think we've all both I had somebody comment on a YouTube video or a TikTok video I did about, you're so wrong. That's why you don't have any hair. And I'm like, well, and it was a comment of it was my price targets on NVIDIA. And
Yeah.
I was like, oh, 110. Well, it's at 104 now. But anyhow,
Well, I mean,
no, that's
again, you
genetics, folks.
you bring that up, and I mean, that's number one rule is don't fall in love with a stock. And we talked about it last week when we did our Saturday Two Regular Guys show, and we talked about, there's being right and there's making money. Okay.
Yeah.
And I had a discussion with someone yesterday and their earnings came out and it didn't it was off by a couple cents, among consensus. And he was so mad because he was so right about this stock and this company. How could it do this? And blah, blah, blah. And there is no right or wrong. There's just making money or losing money, and
Right.
we want to make money or we're preserving your money. And which is just as equally as important. You got to know when to get out based on your risk tolerance, and take it over to treasuries or, put it away and wait for the market to come to you. And it's so hard to teach patience and discipline. And that's where most people fail in trying to swing trade or try to manage their own money.
Yeah.
And even on long-term investments, that's how they fail.
Yeah. Well, Mark, do you want to hit some charts?
Well, we can look at some.
Yeah. All right. I think you have access. Wow. S&P is down 1.1%.
Well, let's just look at the Qs here. So why would you not want to get into the Qs here and get out there?
Mm-hmm.
Get into the Qs here. Now let's just say you got it in here 463, and then you come up here and you get out. Okay, where were we down here?
Right there.
Yeah, right here. 463. Come up here. Get out at 481. Okay, and then you miss all this, or you miss all this, and that's what we're talking about. Look at this. This is the Qs. The Qs is now under the 50, under the
Hmm.
9, under the 20, following the Bollinger Band down. Here's a support level, and we've got the 200 coming up. If these fall below the 200, that's when Paul Tudor Jones, in 2008 would have gotten out of this index when it
Right.
fall below the 200. So let's look at the SPY. You were just talking about the SPY.
Yeah, one of my alerts showed up on my
Yep.
trading view screen.
So the SPY, look at the SPY is now under the 50 again, under the 9, came up, couldn't get past the 9, under the 50, right back to the lower Bollinger Band. We're seeing the oscillators just die here.
Yeah.
Okay, again, why not get in here? Get out there,
Yeah.
and this is just the charts, okay? Why go through this? Why go through this? Okay. But it takes work, Trent, as you know. You just can't expect someone else to do it for you or think it's magically going to work. You have to have your own system, put your own plan together and follow your plan. If you have to, adjust your plan as needed based on your experience and history and what you see and what you learn.
Yeah.
Let's go over and just
Mark,
look and
real
see.
real quick, real quick.
Yeah,
That the orange line there is the 20-day simple moving average, right?
this is the 50.
That's the 50, excuse me,
Yeah.
50-day moving average.
Yep, this is the
That
20.
that's simple. Look at the 50. I'm looking at that going, you're now going through a sizable support level, average.
Yep.
And if it closes below that, that is to me based on a 1-year chart, that is when you look at it, it just the question of what direction is this SMPY going or SPY going? And it's real easy. It's going south.
Here's your
Very
weekly.
simple approach. Okay. Yeah. Look at the 20.
Here's your weekly. Here's your 9.
Yep.
Here's your 20.
Yep.
So now, if this closed on a weekly, based on at least my trading plans, and I was trading on the weekly, got
Uh-huh.
in here, I would get out today. I'd get out on Friday if it's still like this.
Yep.
I got in here. Okay, so that's the way it works. And even on a weekly, let's go look at a monthly. Let's see what a monthly looks like. You trade on a monthly. Okay, so if you're in a monthly, you're still in this chart. Okay, because you're trading on a monthly. You would have been back in here, and you're still in. You're still above all the indicators. You're watching the oscillators. Okay, so you can trade on anything. This is more long term. So these are each month. 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12. There's 1 year right there. 1, 2, 3, 4, 5, 6. There's a half a year right there. There's a year and a half if you're trading the monthly.
Yeah.
Okay. Then you look at it once a month.
And
Okay. But
you don't have to look at it every day.
no.
You
But
literally,
if you start on a monthly, you end on a monthly. You don't go to a
right.
daily or an hourly. Okay. For sure.
Yeah.
You just don't do that. I'll go back to daily here. Nope, it'll let me back in. Here we go. So this is back to a daily. Let's look and see. Let's see where this is flowing. Let's go into, so this is your S&P, okay, weighted, okay, the SPY, and you can see today we're down.
Uh-huh.
This is the S&P equal weight, which is going sideways, a little bit up. It's now converging with the equal weight. So what we're seeing is the S&P is just going dormant, basically, and down. Here's
Right.
and here's the small cap with Russell.
Russell
So
2000.
you see
Yeah.
that money went into the Russell, and now Russell's going sideways a tad bit too. But
Yeah.
looking at the SPY again, you look at the SPY on the MACD and the stochastic. We're still not there yet.
We're headed
So
south. Yeah.
yep.
Interesting. And for
So
those who don't understand the difference between the S&P 500 you see on the daily news or on the, that is always referenced, it's market capitalized weighted. That means you multiply the stock price times the number of shares available of that company, and whoever has the most value is that allocated at the top of the list and then down to the lowest. So Apple, Microsoft, and NVIDIA have been the top 3 for a while now. Now that they're selling off, you're seeing that momentum is pulling the S&P down.
yep. this I put on the watch list this morning for whoever wanted to trade it or just look at it and learn. We had a one candle close above the 200, which is a really hard resistance level to maintain. And I said, we want to make sure you have a back test of the 200. See, here it failed and it
Uh-huh.
went below. So again, we look for back tests. We're above the 50, we're above the 20, we're above the 9 and the 200. We have some good oscillator action, but if we can get some back tests and stay above this is what we look for. And this is on a down day. Okay. We also, I think it was yesterday. Was it yesterday or today? We put this was a couple days ago. We put this on Allegiant Technologies A, and we got in right here. Okay, and you can see that's gone nicely up on down days. Okay, that down day yesterday, but it was up. But again, we're looking at Bollinger Bands. We're looking at crossovers. We have a crossover the 50 by the 9 and probably the 20. We're above the 200. Oscillators look good. So even in bad days, bad weeks where the indices are going down, we can go find stocks. They're harder to find, and you
Hmm.
better keep an eye on them because and set limits. Just don't set it and decide it's going to go because it can go the other way really quick in these markets. And you want to make sure you have stops, protect your gains, or reduce the amount of your loss. And that's how the game's played.
Yeah. Something I learned from Jason Shapiro, was featured in that Unknown Market Wizards, is setting the limit of how much you're willing to lose. That book is a great book, by the way, to anybody who has interested in how traders develop and how their stories. But he has a set amount he's willing to allocate to a position. He trades in future contracts, so much more volatile. But he also sets how much he's willing to lose. And as he says in the book, I'll get stopped out of the position I like multiple times, and I'll keep coming back to it, and then just waiting for the right setup. But his loss factor is like 1 or 2%. So he isn't allocating 100% of his capital, but he's also not risking on the downside losing 10% of whatever he's allocated. So
Right.
building
And
that
that's
process is very important of what can I afford to lose
right.
and
And
set that.
managing your risk. It's managing your risk. If you
Absolutely.
if you get in, and you get down and you're down so far, you're like, oh, I'm just stuck. You're pretty much gambling. If you were at a casino and you're on a slot machine and you get up $100 and then you're down 20, you're like, okay, all I want to do is get back to even. Now you're down 100. You're like, I'm just going to keep plugging this. It's gambling. Okay, and the
Yeah.
same can apply in the stock market. If
Yeah.
you don't have a plan, you're pretty much gambling.
Yeah.
And the,
I,
and the market knows that, and it's perfectly happy to take your money.
oh yeah. That's how they make their money. They
Yeah,
sit on the other side and go, your probability of you making the right decision is very low, because you get emotional and they don't.
yeah, absolutely.
I think also this is all applicable to the crypto market. Now, you and I have talked about Bitcoin a whole lot.
Yep.
I'm a very big fan of Solano from the standpoint of trading. And I actually, bought Solano at a low price, and stuck with my game plan as it hit resistance, exited out of it yesterday morning after I woke up, and I am so glad because it's fallen $12 a share since then. And I think that's just that part of that. These techniques can be applied to really anything that is tradable, and crypto is a big one as well. So, but even Bitcoin, I'm looking at today, is turning the corner as well. And depending on your strategy, I know you're a longtime holder of Bitcoin. Um, it creates opportunity for purchases. If you're more of you're swing trading it, you can do the same strategies, but you apply it to Bitcoin as well as you do on our watch list with Best of US Investors.
Yep.
So here we have Bitcoin here.
Yep.
So we have 2 days selling down towards the 20, it looks like.
Right here.
Yeah.
Yep.
So then it's a question of, okay, does that hold? And then do you have a day close above the 9? And does that become support? And that's just a matter of
Yeah.
patience and time. And then your
Let's look at
oscillators as well.
here's your weekly.
Yeah.
So you're trading it more long term. You can see consolidation right here.
Yeah.
Okay, that's first thing I see.
Yeah.
Okay, and then the Bollingers will tell you that also here. Okay,
Uh-huh.
and that's on a weekly. And let's just go to a monthly. There's your monthly. Same thing. We're seeing consolidation over the month too.
Yeah.
And I think, here was our big buildup when we had halving, and
Uh-huh.
now it's just consolidating. We'll see
Yeah.
what happens on a monthly basis.
Yeah. So depending on your time frame, I look at that and I see sort of a flag formation
Yeah,
there being formed, and that typically is a bullish um, point of view.
yep,
Um, who was it? Tom Lee, I think, said he put a price tag by the year's end of $150 on
150,000.
150,000. Yeah,
Yeah,
150,000 on Bitcoin by year's end. Um, who wouldn't want that, right? But I think it's
nobody does.
learning the charts, and the behavior of the charts is really the important part of this.
Yep. I mean, you would have saved yourself a lot right
Oh,
here getting
yeah,
out. Yeah.
yeah,
So anyway, I mean, it's not for everybody for sure, and it takes work. It's not something that we're going to do for you. It's something that we have a good community that comes up with ideas and supports each other. We don't tell you what to do, for sure. I don't.
no,
I don't know
it's
your
against the
situation.
rules,
Yeah. Well, and I don't tell you what church to go to. I don't tell you what neighborhood to live in. I don't tell you who to marry or who to divorce. I don't tell you what beverage to drink or what food to eat. Why would I tell you what stock to buy? I can
right?
just present you with setup charts, and you can make up your own mind based on your own personal situation, your own risk factor, your investment horizon, and in what you have and what you want to do.
Yeah,
I know it's different than me. It's different than Trent.
yeah. It's like I was talking to this individual as part of our tribe today. I was like, our goal is to teach you, to show you the tools, teach you how we build our processes, and assist you and guide you as you build your process that fits your lifestyle, fits your dreams and goals, and then be there to support you as you progress forward. That's what this is about. And we have some great tribe members who are very knowledgeable about other things, and they share their ideas. And it's a great community. It's just fantastic. It's so
Yep.
cool. Yeah. Well, Mark, do you have anything else you want to hit upon?
I don't know. You're the one that's like pounding your hands on the table. So you
Uh,
tell me.
this is good for me because I just get all this energy out every week. But no, I think this is, I've been doing this since 98. So I went through the .com, I went through the housing, went through the pandemic, managing people's money up until April of 21, when I sold my business to my business partner. And now I've been a part of this for going on 2 years, or it's been 2 years. Um, and my biggest thing is, deep down, is my concern that people watch their dreams and goals evaporate because they just get stuck with a deer in the headlights attitude of, oh, it'll come back. But as one tribe member said, it took him 13 years to get back to even from the housing crash. That's a
Yeah,
whole long time. He didn't
yeah,
stop aging, you know. So that's my big concern. I hope you all take what we're saying here and just take it and think about your situation and think about protecting your family's wealth. And like I said to a tribe member the other day, like I've said to my potential future son-in-law as he was making a big life decision, I said, if there is doubt, there is no doubt. You know the answer to this. And truly, if you are doubting, if you're thinking, oh, well, maybe, you know the answer. Go with your gut. It most times won't steer you wrong. So anyhow, that's my preach. That's my soapbox. I will let my
Say
hands rest for a
hallelujah.
month.
Amen.
Amen. All right. Well, thank you. Hit the subscribe button if you enjoy our Best of US Investors YouTube channel. Hit the like button. Please share it with a friend. We appreciate that. And also, we have a 14-day free trial of Best of US Investors. Just go to bestofusinvestors.com or www.bus13.ai. That's bus13.ai. Yeah, bus13.ai, and that's our abbreviated URL. So go check us out. We'd love to have you a part of it and love to be a part of your investment growth. And in the meantime, have a great day, and we'll talk to you later. Peace. Cut.